Hello and welcome to Moneycontrol. Indian Renewable Energy Development Agency, better known as IREDA, is all set to hit the capital market with its IPO on 21st November. This will be the first PSU to come out with an IPO since LIC's issue in 2022. I will not waste any more time because with me is Chairman and Managing Director of the company, Mr. Pradip Kumar Das. Mr. Das, welcome to Moneycontrol.
Thank you. Thank you.
Mr. Das, help me understand. IREDA, of course, there have been two attempts in the past to go with an IPO of the company, and it's finally happening now. The market is very different. The company is very different in all these years. Help me understand why now and how do you see the timing of the initial public offer to begin with?
Yeah, very good morning, and thank you. Thank you for inviting me for this discussion. You rightly said that earlier two occasions, two attempts were made. When we come to the market, we have to ensure there is a win-win situation for all. It is not only that the corporate needs fund, the investor who are going to invest, they need to have a sustainable future as far as the return and wealth creation is concerned. The timing now is most perfect, what we believe. The kind of renewable development has happened in last 9 years in the country, it is quite phenomenal. If I give one example of solar, in last 9 years in country, solar has grown 25 times, which is a record in itself. No other sector, I do not know any other sector that has ever grown that way. And so timing is perfect. And if you see the series of COP programs and COP commitment, whatever our Honorable Prime Minister committed in the COP, India has delivered to that. If you take the example of 175 gigawatt by 2023, which we committed earlier, and we achieved that much before 2023. And again, we have a commitment to go up to 500 gigawatt of installed RE capacity by 2030. At the same time, we are aiming to become developed economy by 2047. Even if for a while we park this developed economy target 2047, we will only focus on 2030 of capacity, installed capacity of 500 gigawatt, apart from decarbonization and other things. Fair amount of investment is required in the country. We have a rough estimate of around 30 lakh crores of investment required for having this additional RE installation required. July ending it was 177 gigawatt. As of now, we are reached almost 182 gigawatt. If you go by the July figure, the balance what we had worked out, around 30 lakhs crores will be required for RE development in the country, additional installations. And out of which, typically if you go for 75-25% of debt equity, 24 lakhs crores will be required from debt market. And typically half of it will be coming from NBFC. And when it is coming from NBFC, IREDA is the most preferred NBFC, even as on date, because IREDA is a pure play green finance company working in new and renewable sources financing since last 36 years. If you take out this 9 years, other players have also started coming into this foray, whereas 27 years, almost single-handedly, IREDA was doing this activity. Since, if you take almost nearing 3 decades, 3 decades of rich experience, now it is 3.5 decades, more than 3.5 decades, of transitioning the emerging RE to established RE. So, IREDA has that tried, tested, trusted, comfort position of handholding the sector for development of RE in the country. We have fair amount of business opportunity and we require fair amount of capital. So whatever we do, equity, government has infused 1500 crore in March 22 and through various modes of dividend exemption, almost we have plowed back the profit to the tune of similar amount. Against a 2300 and odd crores of net worth in March 23, we have reached now in September 6,500 crores of net worth. Even in March, it was around 6,000 crore. So, what we can do typically in order to comply the RBI governance of exposure norms as well as CRAR and ensure that healthy, stable credit rating in place, which will support us for raising the funds, most competitive rate in the market. As of now, we have triple A stable credit rating, which was straight away jumped from double A plus. It's a very rare case that any rating agency will give you sudden jump from double A plus to triple A stable. So it is not important what we have achieved, it is more important how we have achieved and what is the sustainability in that governance which will enable. So we are very careful and cautious. We will can leverage fully to the extent of 8 times, but we will be keeping with 7 and 7 plus only, so that we continue to maintain the stable. So in order to maintain that, we need additional equity capital, sub-debt capital, as well as perpetual debts. Through these modes we can do, so that our CRAR can also be healthy. Right now our CRAR is around 20, RBI's mandate is 15, whereas 17 would be sounding a healthy kind of thing for the rating agencies to rate us, and enable us to continue that AAA stable status. So we have to cautiously raise equity and raise other modes and raise debt market funds, so that we can support the sector. And since, as I said, 30 lakh crore is required, 12 lakh crore from NBFC, majorly IREDA, and we have other 2 government NBFCs, largely in power sector, PFC and REC. They are going to play a key role, and huge amount of business opportunities there, huge amount of commitment through COP and other mechanism is there. So we are working for a sustainable economy to be in place in order to ensure a healthy environment available for our future generation to come.
Mr. Das, you've given a very good overview of where IREDA is placed and what's happening in the industry. In fact, I would like to kind of get into details of some of the points you have raised. First things first, 36 years of existence, but the kind of growth India has seen in the renewable energy space in the last 10 years has been incredible and pretty much reflects in your business performance as well. In the last 3 years alone, your loan book has grown some threefolds. Now, is this sustainable? Given that, as you mentioned, that a lot of other, NBFCs and financiers like PFC and REC, they are also now diversifying and going aggressively to finance renewable energy projects. So, is this growth sustainable?
See, first of all, we are a pure play green finance who have established track record of having a very matured relationship with the developers. Those who are established today, they were emerging 10-20 years back, and we are with them. You are right, other NBFCs, REC, PFC and others, they are also getting into it. See, future is new and renewable. Let us accept that. We have to go for adding new and renewable, and we have to gradually depend less on thermal and other sources, which is having carbon components. Now, but we cannot completely rule out thermal. So when I said around 500 gigawatt of installed capacity planned and additional around 220 gigawatt in RE, still we have around 30 gigawatt plan for thermal also. The reason is, renewable being intermittent nature, we need to have fair amount of storage and alternate mechanism to ensure round the clock power. Till such time, we have to depend on largely thermal, and we cannot completely get rid of thermal also. But since the larger chunk of investment and business is going to come from new and renewable, those agencies, you have taken name of PFC and REC. Incidentally, REC is my ex-employer, so I am grateful to work in REC also, because my learning there somewhere I am translating into results. So they have to look into new and renewable sources also, because thermal business is not going to happen. Plus, their loan book, if you see, even today, largely government loan books. Vis-a-vis, we have 75% private sector loan book and 25% government loan book. In 25, we have 20 around towards state utilities. But their renewable, if you see, Last 6-7 months, they have, you are rightly said aggressively, they have signed a large amount of MOUs. At least they have communicated to the developer community that yes, we are there. Because the kind and size of fund requirement, what I said, 12 lakh crore for last 7 years, whatever IREDA does, what it did single-handedly for 2 decades, 2.5 decades, whatever IREDA does, we cannot enhance our equity base overnight. Like government gave us 1500 crore. Now we are going 1200 and odd crore will be coming from equity. So whatever we do, we can only enhance to a limited extent. But the demand in the market is quite huge. And since we have the expertise of dealing with the private developers and expertise dealing with the new and renewable sources, definitely we will continue to be the most preferred lender in the project construction stage. Post commissioning and testing of renewable project, when the project get de-risked, it is not only other NBFC, even banks are going to come into competition. If you look at in typical vanilla RE, that is solar, wind, hydro, fair amount of business banks have also started getting into. And if the project is de-risked, bank can easily come. And see, we are the dedicated agency for dealing with this sector. So we have the expertise and we keep on enhancing our expertise. See, we are handholding, like though we are 36-year-old, we have fair amount of experience, though we believe and the market also perceives that we are the most experienced in this field. But whatever experience you have, when it is new and emerging, you still need to de-skill, reskill and upskill your human resource. Since more than a year, we have engaged Boston Consulting Group with us. They are handholding us and their presence has already been reflected in our result and governance. If you see, last 3 years, you rightly said, in 33 years, our loan book was 23,000 crore plus in March 20. But in 3 years, till March 23, we have added more than 24,000 crore. That means in 3 years, we have added more business loan book than what we did in 33 years. At the same time, if you see, we came up from AA plus to AAA stable. We are upgraded from a Schedule B company to a Schedule A company, and we are in the very advanced stage of becoming Mini Ratna to Navratna company. In a span of 3 years, we have attempted to give the best quality corporate governance standards in the country. Perhaps we are the only agency in this space who is doing every quarter full audit of accounts, and we are the quickest in publishing our audited results. We are quickest in holding annual general meeting. For an investor, audited result and annual general meeting quickest gives a huge amount of sense of confidence with respect to system in place in the organization. Without having a system, you cannot give a best quality corporate governance standards. And we have undergone 3 RBI inspection in last 3 years, 2 clean reports, another one, the last one we are expecting very soon also. We are largely quite well compliant as far as RBI governance is concerned. So if you focus on governance quality, numbers are going to emerge. The developer is going to come to you. You continue to sustain your rating. When we are publishing quarterly audited result, we are getting fair amount of quarterly inputs from the developer about the project and about their promoters. What is indirectly enabling them also to improve their governance standards, which is indirectly supporting them to either sustain their rating or improve their rating. If their rating is sustained or improved, they are going to continue to get at a cheaper rate borrowing from us. And if we sustain our rating, we will continue to raise from the market at a very cheaper rate. That is what the object is.
So is there a growth rate target for the loan book that you have set for the coming years?
If you ask me honestly, 3 years back, we just simply discussed among ourselves, team, that let us go double everything in 3 years. But that was just a number discussed, but no number we worked on. But what we discussed, that we should ensure a sustainable best quality corporate governance. If you ensure that, your rating will improve. If your rating improves, your borrowing cost will come down. If your borrowing cost come down, your rating improves, and you help your borrower, as I said, improve, then you can pass on that. So in the time to come, we'll sustain that, And we will today also, if you see, our borrowing cost is lowest almost, or almost at par with our so-called perceived peers. You all in market, everybody try to attempt to compare and peers. Actually, there is no peer as such in true sense and spirit. We are 100% pure green. We are largely into private sector financing, and we are largely into new and emerging space. And so there is a very uniqueness in our organization. Then kind of best quality corporate governance what we have exhibited in last 3 years, that has spoken volume. See, I do not find any lender is having in the country that kind of system that every quarter you meet your borrowers. Try to understand what is the sectoral challenges from them. Try to understand what is the project issues with them. Try to understand what are the issues they are facing with us, be it IREDA process, procedure, policy, or even employee behavior. We try to capture everything, and whatever is to be done within IREDA, we at least try to translate into action within 48 hours. And any challenges of the sector, we pass on to our parent ministry, MNRE, and we have a culture in MNRE, at least since 3.5 years of my tenure in IREDA, what I have seen, Honorable Secretary MNRE takes every quarter sector holders meet. Honorable Minister Power and MNRE, he takes at least every quarter stakeholders meet, and apart from that, any kind of issue emerging calls for a immediate meeting and interacts. And it's a very two-way exchange of information. See, any sector, if the policymaker and the lender and the developer work in a cohesive manner, in a transparent manner, and in a very strategic manner, I am sure not only business will develop, business will sustain, and it will be win-win deal for all. And today we are living in an era of competition, era of globalization. If it is win-win for all, it will be sustainable. Since we are working for a sustainable future, sustainable environment, we have to work in that spirit, and IREDA ethos and culture is based on that.
Mr. Das, of course, the sustainable future that you're talking about is, of course, the way the world is moving right now. Talking of the IPO particularly, you're offering shares in the price band of 30 to 32, and IPO will open on 21st. Now, part of the proceeds would be obviously going to the government because there's a offer for sale component. And there is a part that will, of course, come to the company as a part of the fresh issue that the company is doing. Help me understand with this capital, how does your debt to equity issue ratio change post IPO? And you said that you are comfortable with a leverage of 8, if that is what I am to understand. Will that continue? And with this IPO, what is the headroom that you get for borrowings?
See, we can leverage maximum up to 8 times. Okay, but our strategy would be to leverage around 7 plus, so that we maintain a healthy CRAR around 17, because we need to sustain our credit rating of AAA stable, and anything below 17, though minimum is 15 as per RBI norms, right now it is 20, it's quite healthy. Post IPO immediately it will improve, but we have fair amount of business in place, opportunity in place. If you look at the way we have grown in last 3 years, if the same trend continues, we may be again requiring equity infusion or sub-debt or BA. So this 1200 and odd crores will enable us to go to 7 times of borrowing. So 6 to 7 times of borrowing, then we can lend up to 7 to 8 times further. But the kind of demand in the market and opportunity we have created for ourselves through passing through that tried, tested, trusted mode of transitioning the developing RE to a emerging RE in last 3 decades, more than 3 decades. And since last 1.5 year, the way we have supported to CBG or ethanol, which is purely new and challenging and emerging in the country, and at the same time to e-mobility and its related infra. So we are quite confident and optimistic. We are comfortable. We will be fully leveraging whatever to the extent possible of our net worth fund, and even we expect much beyond business. Now the question you should be how we are going to do. One side I am saying we will restrict at 7 times, then I am saying we can further have opportunity. See, if you look at last three and a half decades, the ticket size of RE projects and construction period used to be typically 6 months to 1.5 years in case of solar, and in case of wind almost similar, and in case of hydro 2.5 to 3 years, and depending on the terrain, what is it, pretty hilly area and other things, then it. But today, if you look at green hydrogen and its manufacturing or offshore winds, typically offshore winds, it is almost 3.5x to 4x of what it is onshore wind, be it not only investment but also construction period. So ticket size is big. So what we will be doing, we will be restricting to the extent of our exposure allows to any project or any group. 30% of any entity and 50% of the group we can go. Even in solar manufacturing, its component module and sales or integrated module, what PLI government of India has announced and what developers are setting much more than the PLI component. So fair amount of big ticket investment is happening. And they are our existing borrowers. We have already received couple of applications from the existing borrowers as well as new borrowers for manufacturing of solar and other things. Where the ticket size is much bigger than our exposure. What we will be doing? We will be doing joint lending. And 1 year back almost we have signed MOU with Bank of India, and we have already done a big transaction of 4,444 crore for SJVN, where we have joint lended with Bank of India and IIFCL. Now we have MOU with IIFCL because recently we got infra status from RBI.
Yeah.
So we'll be getting into the infra, but not general infra. It will be only green related infra. And we have signed another 3 banks MOU also, Bank of Baroda, Union Bank and Bank of Maharashtra, and couple of banks in pipeline also to sign. So what will happen in the time to come, post our fully leveraging, we have the talent, we have the resource with us, we can do the appraisal fastest, we can do the due diligence better, and balance amount beyond our exposure will be joint lending through these banks and others. Even with REC PFC also we can go for it. And REC today, the kind of business opportunity what we are having or RE is giving, even if we 3 agencies complement each other, I am talking of government NBFC, IREDA, REC PFC, your question would be, your question was that they are coming into this place, how you are going to do? See, they are coming, they were there earlier, they were not doing, they started doing. So bit of time will be required for that learning curve to reach, but we are there, and if we complement each other, fair amount of business we can do. Our object is to support the sector to develop fastest, not faster, fastest, so that we can reach 500 gigawatt before 2030. And once we reach and support and establish this, then 2047 target of reaching to the developed economy, the dream of our Honorable Prime Minister, what he has already announced, it will not be far.
Mr. Das, give me some sense on the numbers. I mean, your net NPA ratio has come down significantly in the last 2 years. It's around 1.66% as on FY23, and I understand it's around the same level right now. Where is this headed if we were to ask you in terms of guidance, and also in terms of your net interest margin? When we look at that, again, it's not an apples to apples comparison, but it might look like it's slightly lower than your peers. So what is your guidance on these 2 accounts? If you can give us some color on the numbers.
Yeah, slight, I think you in contradiction in your question, because you said it is not apple to apple. Again, you are saying peer. For a while, let us accept, okay, let them be peer. They cannot
peers
be.
that you are comparing.
So, but you are right, it is not apple to apple. Because we are doing, we are lending not any government scheme. We are purely lending for renewable project development, and largely renewable project development happening in India by private developers, except for some central CPSEs and except from some states in a minuscule old hydro they might be renovating and all, or some transmission lines for the states. Other than that, largely it is private sectors who are developing. So our loan book is pure private sector. And when you are developing a sector, you should not expect super margin, super NIM. If you earn a healthy NIM and have a mix of asset quality in your book, if you see, you are rightly said, our NPA has been reduced to drastically reduced. 3 years back, our net NPA was 7.18. March, it became 1.66. It is further come down, 1.65 in September. So the trend which it is going on, see, we have a very robust review monitoring mechanism in place. Our project risk assessment model, that project appraisal module, the tool, that is our proprietary model. It's a very robust one. And today, any IREDA appraised project is easily accepted or adopted by banks and others in case of joint lending. So they are very comfortable with us. They rely heavily on us, our skill set and our repository of information and our system of project appraisal. Apart from that, we have a very robust review monitoring system in place since last 3 years. We have a dedicated division for review monitoring, and every month we review each and every account, and we minutize that whatever meeting happens along with our project technical team, finance team, legal team and review monitoring team. Those are documented, and every quarter when we do the interaction with the borrowers, we again review with them. So robust review monitoring in place and hand-holding approach to the developer, that has enabled us to reduce the net NPA from 7.18 to 1.66 in March and 1.65 PA, and we are hopeful and confident we'll further work on reducing that also. See, typically in a renewable project, if your due diligence is accurate, at least to the best of the level of accuracy, and you have enabled fair amount of transparency with the developer, and you have attempted to reduce completely asymmetry in information with the sector, with the developer as a banker, then renewable project has to be safe, because post commissioning, because construction cycle is very small vis-a-vis other project, be it nuclear, be it thermal, and then post commissioning your raw material is free. So you have to only manage interest cost, which is largely post commissioning. If you see solar wind hydro, almost 75% cost is interest cost. So you have to only manage interest, and that is the reason what we have done when we captured this interest rebate mechanism of COD, post COD and testing, and then external rating of the promoter. That means project de-risk and the promoter's risk factor will be assessed through rating through the external agency. We passed on the rebate to them because the project is de-risked, promoter is risk free. So typically in a kind of project and promoter, pre-COD to post-COD and testing, 150 to 180 bips of difference interest is there. What it enabled us to build a fair amount of commissioned assets to our book. Today, if you see March data, 30% our book in solar and 20% in wind and 12% in hydro. If you see all the generation category of assets, we have 80% commissioned asset. If you have 80% commissioned assets, your asset quality improves and your provisioning requirement will be less. Though NIM is less there, but provisioning is also less. So against a 70, in case of fossil fuel, people are doing 70% almost provision coverage ratio, whereas in our case it is 48%. So what is happening? My provisioning is less, so my bottom line is improved. So ultimately as an investor, you require also profit. Your net worth should increase. So wealth is created.
So, am I right in summarizing that NPAs, the way you have been reducing, it will continue on that trend? I mean, will remain below 2% for sure if the trend continues. And net interest margin, you are comfortable with these levels and you don't really expect any significant change going ahead?
Actually, our NIM has been improved, which will be reflected in December result.
Okay.
We have enhanced the interest rates post July.
Okay.
So 1st July onwards, we have, I think, once or twice we have modified the rate, because our last two borrowings, one is around 1 month back and another one is 1 to 2 months back, our borrowing rate has also gone up. So the moment borrowing rate has gone up, we have also enhanced BA. But slightly in the emerging RE, our NIM is much more in comparison to established RE.
What is the percentage of emerging RE right now in your portfolio?
18%.
And this will go up significantly?
We have a strategic plan to have 50-50.
Okay.
because 50% business we are envisaging to come from emerging space and new sources, and those are challenging. So risk premium will be more. So NIM will be more there. Of course, we have to have sufficient provisioning, but finally the delta you will find quite comfortable. But it also depending on the market conditions and the timing, what we are doing when we are doing, because ultimately our existing developers largely are going to play a key role in the new and emerging space. So since we have the database with them, their past database, track record, projects, and when we want to further extend additional financial support, we only have to work on the project mathematics rather than other things. And most of the cases we are also going for a cross collateral securities. Like existing project is there, they are going on new project, we are cross securitizing, so that we are ensuring that risk mitigation is in place. See, in the new and emerging financing is definitely challenging. First of all, financing is a challenging, then new and emerging is a challenging. But if you look at our track record of 36 years, we have financed 1,07,000 crore by September. And our cumulative write-off is around 200 crore.
So the
Which
track
itself
record.
speaks that when you are largely lending to private sector, largely lending to emerging, why largely, fully, almost, except the state utilities, if you keep aside that, despite that, if your cumulative write-off is around 200 crore, that speaks content. And any project finance lender, you can go and look at their data. Those who have lended to private sector, those who have lended emerging space, what is their NPA? At times they were have 50-50. 50% NPA they were having in their books. Those, if you look at only the private sectors and project financing. So of course, see, every sector has its issue and challenges. And since we are only working on this sector, we have gained the expertise. We will continue to further upskill here. That's the reason we have engaged Boston Consulting Group with us since more than a year. They are a renowned consultant at global level. They are handholding. And if you see they are here more than 15 months almost. And if you see last 15 months, true reflection of not only numbers, how qualitative corporate governance we have improved. And in a non-banking finance company, essentially, apart from your net worth and borrowing, human resource is your only resource. These human resource, how you nurture them, retain them, sustain them, and keep them united, and how you create a very cohesive culture. Our organization is a very peculiar organization, you can say. See, we say that we are not only financing clean energy, we also have to ensure clean governance. We have to clean ourselves. So every day, 10 to 10:15, we have mandatory meditation session for all. Today, since you have scheduled this interview, I gave this interview during this period. Otherwise, we have a meditation guide and we all get digitally connected. We do this mandatory meditation for all. What is mandatory meditation? Decarbonizing ourselves. And that is what enabling us to work more efficiently. Our manpower quality is extremely good. In comparison to others, we have a very talented resource team, very talented project appraisal, project finance and legal team with us, and we keep on improvising.
That's very interesting, Mr. Das, and I mean, we are running out of time, but I have a few quick questions to ask you. I mean, given the kind of growth you have seen and the kind of corporate governance practices you have put in place, any aspirations of applying for a universal banking license? Because that is something, again, I don't want to use the word peer, but your DRHP calls them peers. Some of them have shown aspirations. Are you looking at that space as well?
Our only aspiration to partner Government of India and to partner the developer and stakeholders for fastest RE development in the country with best quality corporate governance standards by us and by our developers. That is the mantra. If we maintain our best quality corporate governance, we will continue to raise fund not only locally, globally also at the most competitive rate. And if our developer maintains the best quality corporate governance standards with them, they can also borrow and take that benefit. It will be a win-win situation, and this kind of cohesive and ecosystem would be handy for faster development of RE in the country and reaching to that 2047 of developed economy status. That is our object.
So you're not looking at a banking license, but are you open to looking at equity investments in renewable projects?
See, we have to develop the sector. As per the requirement, from time to time, we have to revisit our philosophy and methodology. We have modified our object clause a couple of years to 1 year, 1 to 2 year back, to bring in certain new changes to capture the new and emerging. See, ultimately, as I said, our broad goal is this. With respect to that, whatever will be required, we will do that. Right now, we have requested Government of India to give us allocation for 54EC bond allocation, which REC, PFC, NHI, others are using. Second, we have already taken NOC from Niti Aayog and DIPAM and awaiting the NOC from RBI for opening an office in Gift City, where we can raise fund in forex and lend in forex to our domestic developer for their domestic project, having forex inflow post commissioning of their project, as well as domestic developers setting up the project in abroad. These are the two immediate TA. In the long run, whatever best way would be required, we can realign to that, and as of now, there is no such plan of license for bank or anything.
Mr. Das, before I wrap up, I know it's a little too early to ask you this question, but I believe you're already getting calls from potential anchor investors. Give me a sense of what kind of interests are we getting, and some color on what kind of funds are looking at investing in the anchor investment part of the IPO.
So before that, I'll tell you our major lenders earlier. We had around 57% forex borrowing March 20. That means largely forex lenders. They were quite eager that we should get listed, and they were keen in our investment in our equity also. So that is one. See, since whole world is working on sustainable environment, and we are working in that space, it's a huge opportunity for us to come and partner with general public and other investment houses. We have done fair amount of road shows, and more than 374 number of road shows we have done, and we have quite enthusiasm response, and lot of investment house has shown keen interest in this. Numbers, it is difficult to say, because since this is an IPO, we are living in the market, and first of all, despite being 36-year-old, we as a brand name in the country were not that known. But last 3-4 years, we have made quite a lot of visibility through be it e-mobility financing or lot of emerging sector financing. So we are quite confident that investor will be very quite happy to be partner with us.
On that note, Mr. Das, thank you so much for your time and perspective, and I wish you best of luck for IPO. Hope to talk to you after the listing, and best of luck for the issue.
Thank you very much, and I'm sure we'll keep smiling like this post IPO also.
Absolutely.
Post listing.
Best of luck.
Thank you.
Thank you.